Intuitive Surgical, ISRG. Intuitive Surgical is the global leader in robotic-assisted minimally invasive surgery and the developer of the Vinci Surgical System, the most widely adopted surgical robotics platform in the world. Founded in 1995 and headquartered in the United States, the company has built a dominant ecosystem that integrates robotic systems, proprietary instruments, recurring consumables, and software-enabled services. From a market value perspective, ISRG is widely regarded as a high-quality, large-cap medtech company with strong balance sheet fundamentals. The company operates with no long-term debt, substantial cash reserves, and consistent free cash flow generation. Its valuation typically trades at a premium to traditional medical device peers, reflecting market confidence in its durable competitive moat, recurring revenue model, and long-term growth visibility. Business model strength is a key investment thesis. While the upfront sale of Vinci systems is meaningful, the majority of long-term value comes from high-margin recurring revenue, including instruments, accessories, and service contracts tied to procedure volume. Once a hospital adopts the platform, switching costs are high due to surgeon training, workflow integration, and capital investment already deployed. This creates strong customer retention and predictable revenue streams. In terms of growth potential, ISRG benefits from several structural tailwinds. Procedure penetration remains low relative to total global surgical volume, particularly outside the United States. International expansion, especially in Europe and Asia, continues to be underpenetrated compared to US adoption levels. Procedure diversification beyond urology into general surgery, gynecology, thoracic, and colorectal surgery expands addressable market size. Demographic trends, including aging populations and rising demand for minimally invasive procedures, support long-term utilization growth. Despite these strengths, risk factors should be carefully considered. ISRG faces increasing competition from new robotic surgery entrants, some offering lower-cost systems that may pressure pricing over time. Regulatory risk and reimbursement uncertainty could affect procedure adoption rates. Capital spending cycles at hospitals can be volatile, particularly during periods of higher interest rates or constrained healthcare budgets. Additionally, because the stock often trades at a premium valuation, multiple compression remains a meaningful risk if growth expectations slow. In conclusion, Intuitive Surgical represents a high-quality, long-duration compounder rather than a cyclical or value-driven investment. Its market leadership, recurring revenue base, and long runway for global adoption support long-term growth, while valuation sensitivity and competitive dynamics remain the primary risks. For investors seeking exposure to healthcare innovation with relatively defensive characteristics, ISRG remains a compelling but not risk-free long-term consideration.